God, it's Friday, so let's do Friday business in the Federal Capital Territory, Abuja, and we'll make the most of the next 55 minutes before we get into the weekend mood. All right, now I'm Ini John Mekwa, and standing up from the global space, oil prices rose on Friday. Let's look at the number right there. Brent was up 0.23% at $76.79 for a barrel. And we have WTI at $71.72. I mean, I was just going to say, when last did you see, that closeness right there? Brent is normally way ahead. And so we see that they have a very close relationship as WTI gained 0.23%. Now let's look at the factors that have driven this. As we see, both benchmarks are on course for a modest weekly gain, having lifted by a mid-week announcement from the U.S. Federal Reserve that it's likely to cut borrowing. The dollar fell to a 4-month low on Thursday after the U.S. Central Bank indicated interest rate hikes have likely ended and lower borrowing costs are coming in 2024. A weak dollar makes the dollar-denominated oil cheaper for foreign purchasers. European Central Bank has followed suit. They pushed back against bets on imminent cuts to interest rates on Thursday by affirming that borrowing costs would remain at record highs despite lower inflation expectation. World oil consumption will rise by 1.1 million barrels per day in 2024, according to the IEA, and that's up from 130,000 barrels per day from its previous forecast. And they are citing improvement in the outcome for U.S. demand and lower oil prices. Well, weak economic data still coming from China, which we know is the world's second largest oil consumer. That has also added a pressure on oil prices in recent week. Data released by the country's Statistics Bureau on Friday shows that refinery runs in November dropped to their lowest level since the start of 2023, as margin pressure on state-owned refineries saw them cut back production, while sluggish diesel consumption weighed on national fuel demand. And despite ongoing wars in China, property market, the data shows, is in a better than expected shape at this time. And from there, we go to grains. Now, Chicago soybeans rose on Friday with the market poised for its first weekly gain in 1.5 weeks. Look at the numbers right there. We see corn shed. It's down 0.1% at $4.79 for 3/4 of a bushel. We see soybeans down right there, 0.1% at $13.15 for 3/4 of a bushel. And then we see wheat also has dropped 0.2% at $6.17 for a bushel. So that's all the grains we have. Now let's look at the factors that drive them. It's always important to understand what's driving the price. The U.S. Department of Agriculture has said in a daily reporting system that exporters sold 400,000 metric tons of Chicago soybeans to unknown destinations. It was the 7th consecutive session in which the USDA announced a daily soybean sale, and some much-needed showers will arrive in the northern third Brazilian crop areas late next week after hot and dry weather this week. That is also feeding into investors and traders' sentiment. Brazilian soy farmers, some of whom were forced to replant their beans due to adverse weather at the onset of the season. They are facing a dearth of seeds on the market as suppliers have run out of main cultivators, Merino Calpo, and this is according to the chief executive of seed company back there in Brazil. Well, let's leave Brazil and come to Nigeria now and tell you that this cherry news for Nigeria when it comes to financial inclusion is being boosted to 64% in 3 years. We always talk about financial inclusion, and so having this, not so much. We still need more. We have more grounds to cover, but having 64% of financial inclusion measured in 3 years is one thing. The report shows that formal financial inclusion levels is up, but the ambition of the central bank, which is at 95% formal inclusion, is still in the long term. This was released by the General Manager of EFINA, Oluwatobi Eremosele, who made this known while presenting the results to some journalists in Lagos.
In 2023 census, the National Population Commission has come up with new data. So they've gone across the country and they've come up with a sample that then shows us that Nigeria is now more urban than it was in 2006. Okay? Now, financial inclusion is an indicator which we always know is urban bias. So in other words, as a population become increasingly urban, financial inclusion is likely to increase. So we're reporting 68% financial inclusion, and where we had reported 51% formal inclusion, we are reporting 56% formal inclusion in 2020. Okay, so that is the adjustment that we have done. But again, overall, we see not just an increase in 2020. So in other words, even when you account for the urban changes, we still see an increase from 2020 to 2023. That is not accounted for just by the population, because we've already accommodated the increase, the changes in population in 2020. But still, with the 2020 numbers, we see an 8% jump in formal inclusion from 56% to 64% now in 2023.
And as part of efforts to promote trade in Nigeria, the Vice President of the World Trade Center, Abuja, Mr. Ahmed Karim, is advocating the need for effective collaboration and networking in order to create more business opportunities. We're speaking in Abuja, and at the end of the year business and networking cocktail, Mr. Karim has asked business promoters to explore new opportunities through networking that will ensure diversification of services.
Since the inception of our operations here at the World Trade Center Abuja, we've been the subject of speculation. Tonight, we break the silence. We open our doors, not just to celebrate the triumphs of the past, but to invite you into the beating heart of our global community. Welcome to a world where the 22nd floor is not just a vantage point, it is a launch pad for your aspirations. The end of the year business and networking cocktail is an ode to connections, a celebration of bridges. We build the relationships that define our journey tonight. Our team, Urban Elegance, is more than just a phrase. It is a reflection of the sophistication, diversity, and dynamism that defines the Abuja business community. Our strategic trust tonight is not just about numbers and statistics. It's about creating an experience, a tapestry of moments that will linger in our memory.
The World Bank has released the second Nigeria's Development Update Report for the year 2023. Well, this happened on Wednesday with a projection of a 3.5% annual growth for 2023 to 2026 fiscal year. The country director of the World Bank, Mr. Shubram Chowdhury, stated this at the official launch. It happened in Abuja, and the bank is warning against neglecting implementation of ongoing macroeconomic stabilization reforms. The report also recommends specific actions that the government must take to sustain economic growth, including the need to control inflation, sustain savings from petrol subsidy reform, and improve non-oil revenues, remove trade barriers. Well, let's listen to that report, and then we'll elaborate on it with the country director right here in the studio.
In June of
Officials of the World Bank, the coordinating minister of the economy, and some other members of the President Tinubu economic team are in this meeting for the public presentation of the second edition of the Nigeria Development Update for 2023. It is a biannual report by the World Bank that assesses economic and social development and prospects for the country.
The Federal Executive Council,
The World Bank Country Director for Nigeria, sets the tone for the conversation.
the Nigeria Development Update, every 6 months we try to provide very publicly our assessment of where Nigeria stands, what are the challenges currently confronting Nigeria, as well as occasionally a spotlight on the longer-term development agenda. This is part of the effort to try and, provide more basis for an informed public discourse.
Questions about inflation and the current naira scarcity are at the core of the discussions during the panel session.
Addressing the issue of the naira scarcity. Yes, unfortunate, and really the history of that lies in the naira redesign policy. There was a lot of apprehension with respect to where this was all going to end, whether at the end of the year currency would no longer be good for legal tender, and many started hoarding. This is really what happened. Many started hoarding. Happily, the Supreme Court has decided, very clearly that the currencies will be valid post the end of the year.
The two key foreign exchange consumers, over 50% of import spending is on fuel and food. The refineries are coming on stream. The government is looking to persuade Nigerians in Nigeria and Nigerians abroad to save their dollars in instruments that are attractive and that are safe in Nigeria.
Other questions from the audience focus on exchange rate stabilization, as well as exports and imports.
we have consistent raw material exports. We realize that the value addition to those raw material will provide us more FX revenue. So now the administration is now focusing on processes or policies that will help to facilitate the creation of industries.
Then, of course, the backlog of foreign exchange forwards, which is obviously something dear to many people's hearts. We've already settled the outstandings of, I think, about 31 banks. On the rest, we are in negotiations as to the way and manners which those are also going to be settled. And in fact, the process of settling them has started.
Although the Nigeria Development Report commends the federal government for its economic reforms, it strongly recommends that the government take urgent steps to control inflation, sustain savings from the petrol subsidy reforms, and remove trade barriers.
All right, so we're going to delve into that, the details of it, and good enough, we have the person at the top of that conversation, the country director for Nigeria from the World Bank, Mr. Shubra Chaudhry, joins us in the studio. Good morning, and thank you so much for your time. So for me, the first thing, because I mean the next day, the papers and everywhere were awash with, details of the report that you had on the country. And part of it said that the World Bank is impressed with the growth rate of Nigeria. And then you also have that poverty, the number of poor Nigerians has increased to 104 million. So, I mean, isn't it contradictory?
Not really. So, and let me try and explain why. Okay. I mean, yes, on the surface, it may sound so. Look, part of what we were applauding is the turnaround. Okay. The fact that Nigeria has been in an economic doldrums for a while. And what the basic message of the report is that the bold reforms that His Excellency President Tinubu and the new administration took just in the first few weeks has stopped the slide towards what was clearly going to be a macro fiscal crisis. That turnaround is what we are applauding. But there's still a long way to go to Nigeria realizing its full potential. If I can just give you one analogy, think about someone who has a potential to be a star athlete on the global stage. And that's how I see Nigeria, that's how we see Nigeria. That has the potential to be absolutely a giant on the global stage, yet for many years, perhaps even many decades, has not realized that potential and in fact has become sicker, if you like, almost. And there was a need to do emergency surgery, but sometimes take courage, to take that step because it's going to be painful. That step of doing emergency surgery is essentially what we see as the reforms.
The reforms that's
in June, right? It took courage to do that, and it has been painful. Anytime after surgery, it hurts, and so you need relief. So I think the government is providing relief. We certainly stand ready to support provision of further relief, but then begins the slow journey towards recovery, and that requires kind of sticking with this. Patients have to participate in their own kind of recovery process, do the painful therapy, etc. That's where Nigeria is now. And then we see, and the title of our report was Turning the Corner. We're so close. If Nigeria sticks with this, it's been painful, there should be relief, but Nigeria needs to stick with the path that His Excellency the President kind of embarked on, instead of saying, it's become too painful, let's stop. Because then all of the pain will have been for naught.
So the thing about the pain is, if you talk to a lot of Nigerians, obviously when the subsidy was removed, and the impacts, the price of petrol, and of course, cascade to a whole lot of things in the economy, a lot of people complained. And then I believe the media and the government kept saying, we have to pay for this for the future, and all of that. A lot of Nigerians say, okay, let's face it and get, our economy to be in a better shape. But they get discouraged, when we start discussing about issues of cost of governance, the examples that leaders give, government officials. For instance, a lot of people have said, this is an austere time. The president is compelled to have at least 36 ministers. Right now, we have about 44. We've seen the budget for 2024 allocate up to 15 billion naira, for the vice president's residence. Things like this show the people that perhaps the government does not really mean and it's not just the government at the federal level, but also at the subnational. You don't see a governor cut his convoy, for instance, and reduce the number of aides that he has, but they expect that the people will feel the pain. And this is where, dissenting voices come in. Nigerians are like, if we have to pay for it, you're a leader, you're supposed to lead by example. Perhaps the World Bank can advise. I don't want to put you in a tight corner, but perhaps the World Bank can advise on how to handle this. The cost of governance, the issue of the delegates to COP28, even though we had an explanation later, So issues like that really get to the people to say, we don't see you cutting your budget, we don't see you tightening your belt, but you're asking us to tighten our belt. We're already hungry before now.
No, I think, look, the calls for government to do its part, and elected officials, the political leaders to do their part, look, that's natural. And that, it's absolutely right that citizens should hold their elected leaders accountable. That's good. But I do want to emphasize that this is part of an overall kind of process of improving the quality of spending, public spending in Nigeria. If you think about, I was at the National Council of Health meeting in Ekiti last month. Nigeria spends really small amounts on health. So most Nigerians have to pay out of pocket. Up to 80% of their medical spending, healthcare spending comes out of pocket instead of being helped by the government. Now, the part of the problem is Nigeria needs to spend more, but the point I made was that even the funds that are going towards health right now, and if you look at the federal budget or the state budgets, there's so much room for improvement. There are other countries who do not spend that much more on health, and yet the health outcomes are much better. So I think this basic issue of how can government spend better? How can citizens, all stakeholders, hold government officials, elected officials accountable? Absolutely, that's part of a robust, thriving democracy. Okay, on the specifics of individual budget items, I'm not qualified to comment, but I would like to say, keep in mind the big picture. Where are the big buckets of spending? And this is going, and is that being spent well? This is why we made, we were like a broken record in terms of the fuel subsidy. That was the biggest, bucket of spending, and we kept asking, is this really how Nigeria wishes to spend the scarce fiscal resource?
But the World Bank still recently asked the federal government to pay subsidy. I mean, it's all shrouded in, it's not so clear out there. When we calculate, you talk to some stakeholders in the nitty-gritty of importing petrol, and then you calculate how much we pay, we still see subsidy there. And there are talks that subsidy has never really left.
Look, I want to make one thing clear. I think more than anything else, we see our role as just, putting the data, the facts, trying to clarify what the situation is. The choice is always, let me be absolutely clear, with Nigeria, with Nigeria's leaders, but ultimately with Nigeria's, the people, right? What we were pointing out is that if you just do back of the envelope kind of estimates based on information that everyone has available. What is the official exchange rate? What is the global price, dollar price of gasoline? What is the parallel exchange rate? Right now, what would be the landing cost of petroleum? And then you compare that to what you see PMS is being sold at retail. So we were saying, look, there seems to be a gap. You said one thing, the subsidy never went. Actually, let me correct that as well. The change that happened in June, or May 29th, actually, that was real. Because remember what the price was? It was $195. It went up to, $550, almost overnight, right? That was real, and that was fiscal resources, public monies, naira, billions, trillions, actually, of naira, that was going not really clear where, and so that was real. Now the question is, as the naira depreciates, the naira cost of importing PMS will go up. Well, it depends a bit on what's happening with global oil prices, petroleum prices. But so that's all we were doing, is pointing out that, look, this subsidy might be reemerging, and more than anything else, it's just pointing it out so there can be a discussion about it. I mean, I've seen some newspaper headlines this morning saying, World Bank proposal. Well, no, we're pointing out, we want to just contribute to a better informed public discourse.
And you also said that you think petrol should be about 750 naira increase of VAT. But we, at least for journalists, what we've been asking is a more efficient management of the tax system and widening the tax net instead of increasing, the prices or the taxes.
Right. So if you heard the Honorable Minister of Finance, Mr. Wale Edun, on Wednesday at our launch, in fact, he made this point that, look, we do need to raise tax revenue. Nigeria needs to raise tax revenues, but the bulk of it should be by enhancing tax administration, bringing more people, more parts of the economy into the tax net. But that said, Nigeria has to raise revenues, or needs to raise revenues by lots. Let me give you an example. Our typical back of the rule of thumb as to how much revenue a country needs to take in, public government revenues, in order to do the basic functions, law and order, security, healthcare, rural roads, electricity, etc., is about somewhere between 15 to 20% of GDP, size of the economy. In Nigeria, it is right now, even after the removal of fuel subsidies, about between 8 and 9% of GDP, which means you have, going from 8 or 9, and that, by the way, is the lowest in the world. So it's, it should not be that much of a surprise that many government services that citizens hope for and expect are not there, right? So there's a long, quite a substantial gap that has to be made up. And right now, Nigeria's tax rates themselves are very low for sub-Saharan Africa. It's not a matter of, it's rich countries, Western countries who have high rates of, taxes. No, countries in the region, in sub-Saharan Africa, have much higher tax rates, like VAT rates in some cases, excise taxes. And as a result, their government revenues are also much more. So I think, yes, improving tax administration and improving the efficiency of tax collection, that's a big part of the agenda, but by itself, that won't be enough.
But I guess why a lot of Nigerians are reluctant, some people look for ways to circumvent the system. It's because, for instance, you talked about the subsidy removal and funds saved. And the government cannot say, this is how much we saved from removing subsidy in a month, and this is what we're using it for. It's not really that clear. So when you also talk of tax, people are like, I pay tax, but I still have to provide electricity for myself. I still have to put in community efforts for the road on which I operate my business or where I have my house. So what is the motivation? Why don't I just cut corners and use the money to take care of myself, since the government won't take care of me?
Yes. No, and that's completely understandable, right? So if you don't have, that basic confidence that the taxes that you pay will then be used in a way that you or the economy, society will benefit, you're going to be much more reluctant to pay. So it is something that you have to work on both sides. While collecting revenues, you also have to work on making sure those revenues are spent well. So this is part of, if you look at, we ended the presentation on Wednesday by talking about a renewed social compact, right? With government saying, look, we need more revenues to deliver better, citizens holding government accountable, making sure that those funds, tax revenues, are spent better, and then it becomes a virtuous cycle. Right now, Nigeria is what I would call a very low-level equilibrium, which is where there isn't the trust, so people are not willing to pay taxes, and therefore government, even if it wanted to, is unable to, provide the kinds of services, the infrastructure that Nigeria needs. So it's not going to be easy. It's really restoring trust, but you can't say, look, let's spend better, and then we'll come back to increase revenues. Nigeria just doesn't have the time.
Revenue.
Exactly.
You don't even have the revenue.
Exactly. So therefore, it has to be on both fronts. And all I can say is that media, civil society groups, citizens, key into that by saying, okay, we will give you the benefit of the doubt in terms of, yes, there's a need for more revenues, but let's make sure it's spent better. So start paying attention to how government is spending.
Okay, we'll start paying attention. And we hope they won't come after us when we talk too much.
Look, we talk very freely. One of the points I made.
You're a World Bank. We have we are regulated by Nigerian government, Nigerian agencies.
You're Nigerian citizens.
Yes, we are.
Right? We are international partners, but what I've found in my time here, 4 years here, it's government does not listen always or agree with us. And absolutely they shouldn't. But what I've never felt is an effort to say, stop talking. There's a freedom here to express our opinions, which we really appreciate, and we don't take it for granted.
All right, talking about government not agreeing with you, I remember, I think, was it early this year or late last year, where you talked about the intervention funds of the Central Bank of Nigeria and the rate of repayment, which you place very minimal as at that time. And of course, the Central Bank did come out to say that wasn't true. So I guess from your stance, you're happy now that the current leadership of the Central Bank of Nigeria is saying no more loans into those intervention funds.
Yes, in the sense that, one of the basic principles of economics, and then I think just it's common sense, is that if you have an agency or, a team that's set up to do X, then let it focus on doing X and doing it well, and whoever is set up or best placed to do something else, Y, should focus on doing Y. And in fact, Governor Cardoso, again, at our event on Wednesday, that's precisely what he said. He said, look, central bank's focus is on price stability, right? And we have to get our, spend all our attention, time, and efforts on that. On these other schemes, what are called, quasi-fiscal schemes or development interventions, they may be needed, but it is not the central banks. We're not qualified to take that role on. So let's set, if they are needed, they should be done properly. There should be accountability, transparency around them, and whichever part of government should take that on, should take that on. Right? So in that sense, we couldn't agree more. Right? That the central banks all around the world, their core function is price stability. And right now, with year-on-year inflation in the high 20s, that's more than enough. And with the pressures on the naira, restoring confidence in the naira, et cetera, and these are all linked, inflation, what's happening with the exchange rate. It was wonderful to hear the governor say that, look, the CBN is going to focus on that, take it up very seriously.
Yeah, so I guess the argument was that when you look at the drivers of Nigeria's inflation, it's not really like any other country. It's more of supply and demand. And so perhaps if you want to deal with inflation, then you have to go to the source of those supply and demand. If you talk about food inflation, which is a major driver, you talk about the supply of food, 80% or more of Nigeria's food is being imported. So, of course, with the FX issue, we expect that to feed in. So I guess that was it. So I wonder how the central bank, anyway, now they say they're looking at target inflation. That's their focus now. So how can they make it work and effective?
So if you think about what's driven the inflation rate higher and higher in Nigeria, some of it has to do with just how much money is circulating. So one part of that is that money supply, the growth of money supply, and the fact that the central bank was de facto financing the fiscal deficit of government. This is the famous ways and means, right? So that was, and so if you have money in the economy that's circulating and not enough being produced, that's going to increase prices. Second was, if you go back to August of 2019, when the borders were closed, okay? Just look at the inflation series, there was an uptick, okay? Just goods that were flowing in, because Nigeria, right, at that point couldn't meet the demand from domestic supply, all of a sudden the prices went up. So you could actually see inflation is going like this, it started proceeding up. Obviously, as the naira has depreciated, that has that has increased prices because so many items are imported. So in that sense, again, the central banks focus on restoring confidence in the naira, getting inflation down, making sure that there's no need for recourse to ways and means. Tighter monetary policy. Again, the governor mentioned open market operations, what they call OMOs, to try and soak in some. The way that we hope this will play out is that, again, there might be some short-term pain, but as inflation comes under control, the pressures on the naira come down, and then overall, prices will keep increasing, but not at the rates you're seeing. And then incomes can keep pace.
So you think this will help the value of the naira, which is
absolutely
dropped over 30%?
Yes, absolutely. So that's the link between what's happening domestically in terms of, the stance of the monetary authorities, of the central bank, what's happening with inflation. Feeds into, are people willing to hold their money in naira? If you think your naira is going to basically lose purchasing power because of high rates of inflation, you say, hey, I'm going to try and hold my money in dollars. Or if you have dollars and you're a foreign investor abroad, say, I'm less willing to bring my dollars into the economy. So inflation, getting a handle on inflation, will be part of what it'll take to restore confidence in the naira.
So one of the things that the World Bank is doing in Nigeria is renewable energy. And that is, very necessary because we know that businesses suffer. One of the major costs of operation in Nigeria is, power, So tell us about the program and how you hope to get it to the people who really need them. I think we can start with businesses.
Right. So I think the program that I think you're referring to is one that was just approved by our board yesterday, in fact. And it is a $750 million credit facility for the government, and in particular the Electrification Agency. And the way it's meant to work is, it's basically, we call it Nigeria DARES, which stands for Distributed Access.
Okay, I just have to get it down. Nigeria
DARES.
DARES, DARES. Okay.
So Distributed Access through Renewable Energy Scale-Up. Okay. And the basic idea is very simple. It's that there are 80 million Nigerians, and obviously lots of small businesses, micro businesses, that don't have any access to electricity. Meaning it's not even unreliable power. They just have no access, right? So the idea is to reach those 80 million, as well as many in, say, peri-urban areas who have unreliable access, who do have maybe a grid connection, but it's not reliable, and give them the option of solar power. Okay? And the idea is most of this can be done by private firms who come in and install mini grids. So solar mini grids. But to keep the tariffs affordable, it helps if government provides an initial capital subsidy, a subsidy to kind of offset some of the capital expenses of setting up, of installing the grid. So that's basically the idea of the $750 million that will be used primarily for incentives, capital subsidies, other things for private firms to come in and put in their own capital, and we anticipate upwards of $1 billion or more of private capital will come in to increase access to, we call it distributed access because this is not going to solve all the problems of the grid. There are separate support that we're trying to provide there, but at least in the meantime, small businesses, firms, households, and then I want to emphasize the importance of electricity for families. Kids to study at night, okay, or primary healthcare centers to have some way of storing, critical supplies. Okay, so this program, hopefully through this distributed, kind of provision of mini grids, solar home systems, will help provide that access. And eventually, the grid expands, becomes more reliable, all of that.
So which areas are you focusing on or targeting first?
So through this $750 million credit, it is largely for all the households and firms who do not have any
rural
access.
Areas?
Could be rural, could be peri-urban, okay, who do not have any access or who have unreliable access, which tends to be in more peri-urban areas. And frankly, those households who cannot afford to have, a diesel generator or even a petroleum-powered generator, to switch on and off.
Yeah.
I'm sure your studios here have that, right? So.
All right, thank you so much for your time this morning. I do know that you do have meetings, but you took out time to be. We really appreciate your time, Mr. Shubram Chaudhary, the country director for Nigeria from World Bank. Thank you for your time.
Thank you for having me.
All right, now, well, talking about government and holding them accountable, after 18 months of rigorous training, the first cohort of the Africa Development Bank Group's Public Finance Management Academy have graduated. 51 public service employees in the financial sector from 25 African countries who've been exposed to executive training on enhancing accountability, transparency, and curbing corruption and illicit financial flows in Africa are now empowered to plug the leakages in the area of budgeting and revenue management in their various countries and through their various capacities. The hybrid training was concluded with a one-week physical interaction in Abuja, Nigeria's Federal Capital Territory. These are 51 trainees out of 104 who've scaled through the 18-month hybrid training on public finance management from 25 African countries. The training, which is themed Enhancing Accountability, Transparency and Curbing Corruption and Illicit Financial Flows in Africa, targets public finance executives in different countries of the continent. The graduation, which ends after a week of physical interaction in Abuja, Nigeria's Federal Capital Territory, has attracted individuals outside the AFDB.
This graduation is of the serving participants, which we are witnessing today, December 14, 2023, is a testament to the commitment of the bank in responding to the need of the regional member countries to fast-track capacity development towards the achievement of the bank's High Five agenda, the UN Sustainable Development Goals, and the AU Agenda 2063. I understand that the PFMA provides a platform for the aggregation of knowledge from relevant institutions and making them available to our public financial management officials. I find this very innovative in capacity development and should be scaled to other areas of capacity development needs in our government beyond public financial management.
The visionary of the Public Finance Management Academy and Chief Economist of AFDB, Professor Kevin Urama, has a lot of hope in this institute.
Approved in June 2022 by the Board of Directors of the African Development Bank Group, the PFMA is designed to deliver high-level structured capacity development programs, including training, peer-to-peer learning, technical assistance, advisory services, institutional support programs, and policy dialogue to African countries across the whole of the public financial management ecosystem.
And then the 51 graduates are given their certificates, a proof of knowledge gathered in 18 months. They're expected to return to their countries to first share the knowledge with their colleagues and then implement lessons learned and plug leakages in their financial systems.
Comes to us, that's your certificate right there.
And the graduates promise to do just that.
Going home is the use of BOD to become even more prominent in terms of tackling the types of risks that are in South Africa, but also as open ownership, seeing as many professionals who came through to this training this week begin to use this as a core part of their work across the continent.
My role as a head of budget development in Ghana, the entire modules have been very, very helpful. You know, PFM looks at the totality of managing public funds, but this particular training session didn't limit itself to only the PFM cycle, but it looked at the nuances that could affect the totality of the management of public funds.
AFDB has promised to follow up to ensure that there's impact after the lessons learned. Ini John Mekwa, Channels Television News.
Yesterday, I had to, after the programs here, go for that. And we say a big congratulations to those 51 graduates. But we have our eyes on them to ensure that those lessons that they get are actually being implemented in their different countries. We have their contact and we'll follow up with them. Well, now let's take a break. When we come back, we'll head to the market right here on Business Morning. Just stay with us. It's now time to head to the markets, and so we head to Lagos, where Will Ibong is standing by. And I think Will is still celebrating that 72,000 level, which the NGX has hit.
Yes, Ini, good morning. It's good to see you there, Ini. Yes, I'm still, in awe of the NGX. It's heading towards becoming one of the best, stock markets, performing stock markets in the world. And I'm sure that we're going to celebrate that with champagne at the end of the year. But, Ini, the fixed income market is not doing so bad as well. Yes, I'm definitely going to celebrate.
I'll take juice.
You take juice, Ini. No, don't be sober. You need to be high on this. We need to get high on this. But thank you so much. It's going to be very great at the end of the year. But we're going to be looking at the fixed income market today to see how it performed. But seeing bullish sentiment returning to that market, it's just a bit to tell you what's the liquidity system. Is there so much money in the system right now? We'll wait to see what our analysts have to say about that. But we saw average yield declined by 3 basis points to 14.4% across the benchmark curve. We saw the average yield contracting at the short and the mid and the long segments, driven by players' demand for the March 2024, the July 2030, and the June 2053 papers we see on the screen there. And we also seen trading in the treasury bills market was also bullish. Yields are dropping in those spaces. Average yields contracted by about 254 basis points to 8.3%. Across that curve, we saw the average yield declining across the treasury bills markets at the short, at the mid, and the long segments as well. And this was due to bargain hunting. If we look at the OMO segment, we've seen that contraction as well by about 162 basis points to 12.9% in the OMO segment. But we're going to bring in Chuka Nwachukwu, is the head assets and liability management UBA, to give us more insights as to what's going on in the markets. Good morning, Chuka. The overnight lending rate, we saw that expanded yesterday, by about 221 basis points to 20.4%. And this comes as, we saw the debits from Wednesday's NTB auction, which was over 250 billion naira. Can you just give us more insights as to what we saw in the NTB auction? Because particularly, I was quite surprised to see the amount on offer, be just about over 13 billion naira, and then we saw that amount allotted over 256 billion. Can you just tell us why we have this variance, this disparity in numbers?
Thank you very much, Riol. So, like you rightly mentioned, we had an NTB auction yesterday. 13 billion was on offer, and then well over 263 billion was sold, and that's quite huge. So we saw a decline in rates, about 225 basis point decline from 15.75 to 13.5. That's quite significant. This bill is currently trading around 11.5, upper 11 levels. So, like you said, the huge subscription, was about well over 1.4 trillion, and so that's an indication that market, was eagerly waiting for this auction, and then also an indication that the system is still a bit liquid. We saw system liquidity open well over 400 billion on Monday, though between yesterday and today it has declined to around 100 billion. So on Monday as well, this week has been really, it's been an eventful week. On Monday we had a bond auction where over 360 billion was on offer across 4 maturities. The significant thing to note was the decline in yield as well. We saw well over between 50 to 100 basis points decline in yield. For example, the 2053 bond, closed at 17.15. That's about 85 basis point drop from the 18 levels it closed at the previous auction. Now, this week, like I said earlier, has been quite eventful. The major activities this week were the 2 auctions, the bond auction and then NTB auction.
So what do you see the federal government being aggressive in their borrowing plan now, seeing that we're almost coming to the end of the year, the end of the last quarter of the year? What do you see the government, do you see them borrowing more or less?
Yeah, so for the past 4 months, and then as well as this last auction, the amount that was sold will give you the idea that the federal government is really looking to borrow more. For example, 13 billion was on offer, and well over 263 billion was sold. On the bond auction, for example, 104 billion was on offer, and then well over 604 billion was sold. So government definitely is looking to borrow more. That is where you see those activities. You see them being active in terms of oversubscription, in terms of oversold at these 2 auctions. That also, we also filter into the first quarter of next year, where government is looking to borrow more to be able to address the budget deficit. If you watch the budget for this year, for example, well over 27 trillion, has been estimated to be spent. So government, obviously, majority of these funds will be through borrowing, and then of course the fixed income market, which is the local markets here, is where government hopes to borrow more from.
Yeah, we definitely saw that budget, so 2024 budgets where the government's hoping to spend over 27 trillion in the current expenditure, but we'll just see how the government will be able to raise that money, if they're just going to look at the domestic market, or they're going to look at other areas in terms of revenue generation for the country. Productivity is what we should be looking at. Thank you so much, Chuka Nwachukwu, Head Asset and Liability Management, UBA, for joining us on this morning.
Thank you very much.
So, Ini, that's all for the markets. I'll let you, take over for crypto. Hope there's better news out there, because we're celebrating over 40% year to date, Ini. I'm just going to pop to the office and see if my, drink is still cold. I left in a chiller because I don't know. You're not here to join me.
Well, that's not fair, because I'm not in Lagos. That's really not fair.
Oh yes, I did. I waited. I waited.
I must. All right, Will, thank you so much. We'll see you at 1:30 for business.
Definitely.
All right, now let's do the crypto thing. And as Will has hinted, as it happens on Fridays, Ladi has given me this responsibility. He owes me one every week. I'm going to make sure that he pays for it. So let's look at the price. Bitcoin is down to 42. Again, down 0.89%. That's a lot. That's a lot reduced right there. 0.89% down. Ethereum is also down to by 0.31%. And 2,268.64 BNB is also down. We say, I think we're back to a red Friday, unfortunately, back to a red Friday, at least this Friday, because we see Bitcoin losing steam just a little bit, and but it hasn't really lost its bullish sentiment. That's why we still have the market at green 70 and green right there. So it means that investors may be willing, to take some profits. So if you want to join that, or you might already have lost some, because Bitcoin has already dropped by almost 1% right there. Before we go to the top gainers, I believe we have Rume Ofri joining us. He's not coming to Abuja. He's joining virtually. Rume, are you there? Good morning.
Good morning. Good morning, Ini. Good morning.
Yeah. So we see that this morning Bitcoin is down, but we had it at 43 this week. We saw it drop to 42 and then come back to 43. Is it still the impact of the Federal Reserve's intention to start cutting interest rate, or what else is driving this movement of the price?
It seems a lot of people are failing to understand that the fact that the global economy controls cryptocurrency market and everything that is happening in the industry right about now. That is the major reason why the market actually went down. We've actually anticipated all of these. People need to be careful when we say some of these things. It doesn't I don't want to make it appear as even the prophet of doom. People should be very careful. Now the dollar is down in terms of the DXY. You can see crypto moving up, but when the dollar gains momentum, the crypto market is going to see a lot of downside. That is it. When the market sees those downside, people that are anticipating for some of this push to about 50K by the end of this year will be having to lick their wounds. So it's a process. We take it gradually, and a whole lot of things are going to happen. The greed is just too much, and it doesn't tell well for the industry right about now.
All right, so living there now, the issue of the meme coin investments, that's also another issue. Doesn't look sustainable, the meme coin investments we're going to 2024.
You mean meme coins, or
yes.
You mean the entire crypto market?
Meme coins. I mean, we've had crypto market for years now. It's meme coins we're talking about now.
So people, a lot of people see. Yeah, a lot of people are actually looking at meme coins as a way to speculate. Because, for example, like digital asset like Bitcoin, putting your money do it 2-3x, it won't make you a whole lot. So people want something that they could make a whole lot from, which is possible. But probably some of these meme coins that are on the BRC standard, for example, that is the Bitcoin blockchain that is being built right now. Some of them are doing some really good move in the market. So it is strictly for speculation. So meme coins are strictly from speculation, but sometimes you can also lose all your money in the process, because we have seen a whole lot of that from Dogecoin and a couple of other meme coins, for example. A lot of them really don't have intrinsic value, but it's all for the money. So some persons like me and a couple of others are for the a lot of persons are for money, but you wouldn't blame them. Maybe they could recycle it to do other things in the industry as well. But again, it is very risky, high risk, high reward.
All right, Rume, it's good that people like you are there to push some of these conversations forward, so people know exactly what they are getting into. You want to go into meme coin investments, or you want to do crypto, so you know the risks and know that. Tell yourself the truth before you put your money right there. But thank you so much for your perspective, Rume, and have a great weekend.
Thank you very much for having me in Abuja.
Yeah, from Abuja, that's right. All right, so that's it on the program for the week. What a week it's been for me. Very interesting. Started in Lagos, ending in Abuja, but I'll be back in Lagos, my base. Call it a lot of hustle and bustle, but it's the commercial heart of Nigeria, so Lagos is the place to be. I'll be back there, God's grace, by Monday. We're joining you from there on Monday, but it's been a pleasant stay here. Thank you, Abuja, for your hospitality, and the weather, very different from Lagos. And that's it on Business Morning. Thank you so much for spending your 55 minutes with us 5 times this week. We'll start off again next week. But at 1:30, Will Ibong will be joining you with a Business Incorporated update from the world of business. You'll be doing that from Lagos, so you're sure to get an update from the world of business. For me, I have to leave this place, try and get a flight, get home. And I'll see you on Monday, God's grace. Have a great weekend.